beautiful part, we are in a negative momentum environment. Oh boy. So now everybody in the world is now an expert on NVIDIA. Everybody now knows who Michael Burry is. NVIDIA has hit its 50-day EMA. It is reversion day. I am very excited about this chart. I'm not going to lie. This is exactly what I am looking for. This is where we're fired up because that tap right there, oh boy, that is going to present some opportunities for us today to look for some $1, $2, $3, $4 moves possibly on NVIDIA up and down, trading the 3-minute chart, looking at volume weighted average price, and just taking advantage of what this market gives to us. I hope everybody's having a good day. Good morning, Charlie. Good morning, Eric in Northport. Good morning, Stardust, Rodney, John, Bleak, Doji, Ed Mines. Hope everybody's doing well today. Subprime GPUs. All right. Everybody's in a good mood. That's good. Because once again, we're going to talk today in the last 10 minutes about how to trade this slop. Markets have violently pulled back in a relatively interesting way. Again, people will say, well, where's the sell-off? Where's the sell-off? The sell-off happens quietly, slowly, lower highs and lower lows. And it takes a little while. We've gone from 212 on NVIDIA, the world's largest stock, 30 points. It's a lot. It's a lot. 30 points is a lot. How's this that complicated? You're in a double-digit pullback on a massive equity. Now, obviously, the news is good, but the reality is this chop, this slop, this is what presents opportunities. Yesterday, we had one of these things. 186 took us up to 190, and we've rolled right back over. Same thing with ARK Invest, the world's silliest ETF, down to 79. Remember, stair-step patterns down. Lower highs, lower lows. Look to the 30-minute chart. Look for oversold, and then look for a short-term pop. This is just happening over and over again. Silliness. That's what we are all about. Momentum today. We'll talk about the runner at 9 o'clock, and we are at zero date, which is just fantastic because you could just use the leverage of the markets, follow the lines, look for some breakouts, look for some breakdowns, and then roll into a very positive weekend. All right, you know why we do this, because at 9:30, this whole thing is going to shift. We have seen time and time again these movements. Remember, markets don't move straight down. Reversions happen. Stanley Druckenmiller talked about this back in 2018. If you don't know who Stanley Druckenmiller is, I can't help you right now. You need to use the Googles. Druckenmiller, Druckenmiller, and look for the Real Vision interview in 2018, where he was explaining that markets don't go straight down. When we get into the third standard deviation of price, algos step in and bid them back up. And then funds, ultimately, interestingly enough, sell right back into that pressure. So once again, lower highs, lower lows is the trend in a negative channel. And it looks like we are in a negative channel now, going back to October 27th. Momentum. Well, we went from red to green to red to green to dark red yesterday. Caution is very warranted in this environment. You still have some time to raise some cash. You also have some time to sell calls. This is the period where volatility is rising. We are back, my friends, above 20 on the VIX. The UVXY. Oh my gosh, these dogs. The UVXY is pushing. This dog does not stop barking. I'm going to lose it. It's the worst cadence of a bark you'll ever hear. It's the worst. It's just bark, 3 seconds of silence, bark, 3 seconds of silence, bark, 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 2 seconds of silence, bark, 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 for 10 minutes. Okay, we're back to our 20-day EMA on our UVXY. I told you, I warned you about these dogs. We're also watching the FNGD. The FNGD is pushing back as well above its 20-day EMA. We push above that 50-day moving average, and it is game on for this market. That is leverage unwinding in the broader system. In addition to that, we're watching the FAZ because the banking stocks are, well, where all of this chaos has started. We are back above 820, 50, and 8 EMA on the FAZ. So negative momentum environment, minus 28 in the mathematics. For anyone who does not understand this, let me just explain very simply. We take the number of stocks that are breaking out versus the number of stocks that are breaking down using a very specific mathematical formula. Specifically, we are focusing on stocks that are, in a poor man's version of this, down on the month, down 5% on the week, beta over 1 or beta 1 to 2. Then you take the number of stocks that are up 5%, up on the month, beta 1 to 2, beta 1. Okay, that's the poor man's way of doing this. J.D. Henning, his dissertation in 2016 shows that there are different coefficients for every mathematical formula in every single sector. We do that. We do a different version of it. We also include Gary Antonacci's dual momentum system and some of the work that I did in graduate school. We have done this since 2020. Every time that this goes negative, it does not mean there is a crisis, but every crisis has had this signal go negative before it. So we have seen downturns, panics, little short-term blips in the repo market, things along those lines. We've been out in front of every single one of them going back to 2020. Does this mean that we are in the middle of a crisis right now? No. Does it mean that we're going to drop 15%? No, it doesn't. But this is where you have to exercise a lot of caution, because it could. So we are currently short over an NVIDIA on the SH. We're using the short-term inverse ETF of the S&P 500 as our proxy. We're holding up pretty nicely on this one right now. Still time on this. The point of this is that when we break above these key moving averages, that's the time to take your shot to the downside. When it comes to shorting the market, I'm telling you, the real damage to this market comes above the 20-day EMA on the SH or the RSQ. Or what's the inverse on the Qs? I forget. It's too early in the morning and the dogs are still barking. The SQQQ, my dear, dear friend, there you go. Same thing. We push above these moving averages. That's the time to take aim. I know it sounds overly simplistic, but show me the crisis that has happened, and I will show you the SQQQ chart, and I will show you that the time to really short this and bet, you don't have to bet big, just bet enough, is when we break above these 20 days. Yes, short move there, big move there, nothing happened, nothing happened, nothing happened. But then you had April, and then we've had a little spasm along the way. But we're back in this environment where everybody is on guard, and that is what matters now. This is a serious time. This is why you want to raise cash. Does it mean that the markets are going to correct 5, 6, 7, 8%? No, the Fed can step in anytime it wants. The Bank of China People's Bank of China can step in. The BOE has made a decision this morning. The Bank of Canada. All of this is interconnected. They're ultimately going to do something anyway. But if you're going to try to short, now's the time. And then we're going to move into, well, where's the bottom forming? The bottom will form out of two specific places in any environment. One, you're going to see a massive uptick in insider buying. This is April, and this is December sell-off. That big spike, that blue line, that is insider buying to selling in the aggregate, dollar for dollar. How much money are executives buying? And then put that as a ratio divided by how much are they selling. Remember, executives are always selling. Insiders are always selling. A lot of people are paid in stock. When they put their money down, they are buying with their own money out of their own bank account. That's very bullish. So back here, we've seen two major policy shifts. One, this was around Treasury issuance. And secondly, this is where we canceled the Liberation Day. We are not anywhere near this yet. We're seeing an uptick in ratio in filings. That doesn't matter. What matters is cold hard cash. This is called the bottom of every single crisis dating back to 2008, and it calls short-term bottoms as well. So we will be checking this every day for the better part until this event ends. Secondly, on top of that, we will look for some policy accommodation, paying very close attention to what the Federal Reserve is doing. Hey, I'm 6 minutes behind. I got to keep the trains running on time, and these dogs won't shut up. Markets are poised for another weak session. Stock drifting lower. Tech mega caps facing valuation concerns. Look, these are not valuation concerns. This is that environment where people buy the top and then they panic sell because they weren't investing in the first place. They were trying to trade and they were trying to take these things higher, and they dropped under key moving averages, and now everybody's freaking out. Okay. Stock futures drifting lower again. When we open, look at the skew, look at the setup for the hedges. On top of that, what matters? Well, this is the pretty part. 78% of new highs and new lows already today. 67% of stocks now under their 50-day moving average. That is a breadth issue that we must address. On top of that, 52% of stocks under their 200-day moving average. Why does that matter? Because they're technically weak. Technical traders aren't going to touch this stuff until they either hit oversold or they break back above these key moving averages. Traders switch off. All right. On top of that, labor market weakening, shutdown risk drives the uncertainty. And I got to do something about this. I don't like this black background, but for some apparent reason, my PowerPoint has completely had a seizure. But we're going to roll with it. We're going to figure it out over the weekend. Layoffs have spiked. And in addition to that, you saw the Challenger report, 150-some thousand jobs out. Government shutdown dragging on. Good time to buy some real estate in the Washington, D.C. area. Removing those key data points have driven some volatility. Don, we're not going to get the commitment of traders report today. I know his heart is breaking right now somewhere in an island. With fundamentals unclear, private data surpluses could drive wild intraday swings. Once again, we're watching volume weighted average price. We're looking for oversold. We're looking for RSI and MFI on the 30-minute chart, on the ARC, on the NVIDIAs to push to oversold. And then we want to be the contrarian long, looking for a squeeze and setting up. We'll talk about that in the last 10 minutes of today's session. In addition, watch for the ADP private data as we roll out. We're going to look for additional layoff headlines and data sources. The reality is these types of shutdowns lead to innovation in the data side. So great time to create a new alternative data source for hedge funds, whatever that is, and then sell it for profit. Stretched valuations. Again, who cares? Nobody cared about the valuations on the way up. Why do we care about the valuations on the way down? The reality is this. It becomes a perfect excuse to provide cover for the fact that liquidity is tightening and that there are issues in the plumbing of the financial sector. There is an unwinding happening right now. Somebody is racing to cash. The mega cap stocks will drag on. Downside volatility strategies look very good. Relative rotation trades moving forward. Pay very close attention to the defensives. If the defensives start breaking out, that is a problem for the big names like NVIDIA and SMH and Microsoft. We're going to continue to watch semiconductor earnings. We're going to continue to focus on those headlines around more AI spending. And eventually that's going to hit a wall. And oh boy, it's going to look real interesting when NVIDIA is back down around 120. We're just not there yet. Finally, global policy moves. The Bank of England held its rate at 4%. Same problems here, right? They are, again, focusing more on their plumbing than anything else. They've hinted at a December rate cut. Again, this adds to uncertainty between currencies globally. Pay close attention to the DXY, the XLP, again, defensives. Cross-rotate assets as global banks diverge on timing and pace of easing. And again, watch the BOE, European Central Bank commentary. I know that it's boring. It is. You don't have to actually pay attention to it. Just check in with me. I'll tell you. I will gladly sit and watch Jerome Powell talk so you don't have to. 9 o'clock, Charlie, where are you? Mark's asking a very good question. Aren't we coming up to the best 2 months of the year? The Santa Claus rally is largely a no, no. I want to remind you last year in December, a couple of times on this as well. Um, I want to answer this question before we dive into this. Aren't we coming up to the best year times of the year? Here's last November. We had a pop, we had a sell off, we had a pop, and then we had a spasm in the money market. That was last December. Then we had a nice little pop in 2023. I want to remind you this came on the back of a short term bond crisis where the 10-year bond hit 5%. So is that really a great time? This rally that happened in September or no, 2022 came on the backside of the gilt crisis. So, I mean, yeah, technically, but no. This period, December 2021, big sell off, a lot of volatility. It did finish the period up, right? But look at these sell offs. Look at the panic. Look at how these markets are behaving. And then again, November 2020, same thing. You go back to 2016, that's when the China crisis happened. You go back to the ECB crisis. Look, seasonality is not a thing. I'm just going to let you know that right now. It's not a thing. Liquidity is what drives markets. Seasonality is, look, it is a collective behavior. So what do I, just because everybody goes, well, December's a great time to be, bullish. I'm going to follow the 15-minute chart, the 30-minute chart. I'm going to follow momentum. I'm going to follow the 8 and 20. I'm going to buy when the 8 goes over the 20 and the 50, and I'm going to follow it up, and then I will be the first person out if necessary. Santa's on Ozempic. Cool. Man. Doesn't that make you like, doesn't that like get your stomach all ripped up? I don't know. Anybody on Ozempic can tell me about their experiences. Feel like that's something that I should just really get into in 2026. Let's just get guy with a bad back trying to get as thin and jacked as possible. It doesn't work. APH. What do you do? Amphenyl. This sounds like something that we traffic over the Mexican border. Amphenol Corporation Technology. All right, sure. Let's talk about it. Look, I like this chart. We're on the 4-hour too as well, right? Um, hourly looks good. Strong momentum looking good. Okay, that's where we get into a little bit of a crack. But let's go to the 30-minute. APH. Sure. Positive MACD, MFI, RSI. This is where I'm buying here, looking to try to sell at 142 and bailing if it breaks back down to 136. AbbVie, drug manufacturers. Man, we got a theme, don't we? Yikes. I need this back above the 50-day moving average of 220, but I can get into that. This is starting to move a little bit, starting to turn a little bit. This is just such a tough environment. That's the problem. The problem is that I need to just scrap anything that I'm bullish on, turn my attention to the stuff that I'm not. PBF, 15-minute chart. Yikes. That's leverage unwinding. PBH. Okay. We break under 37. Our downside is 33. PBF. Refining. For the kids. What movie is that? For the kids. Hudsucker Proxy. This can get ugly really fast. So 37 line in the sand. We break under that today. I'm looking at 37 put for next Friday. And I'm looking to go hard into the paint on this one. That is an ugly little chart right there. And looking to continuation of momentum. IAC. IAC. Yikes. 30. And this stuff is just ugly. Here, here, here. That's a bad chart. Yeah, you got downside here to 32. So that's exactly where to trade it. Next Friday, if you could do it like the 30, 35, 32.50 or 33 to 31, that would set up nicely. Stop back here at 33.41. And open door. Oh my gosh. You're still a company. Good for you. It's great. So proud of you. I think we're a little late to this one. What we're looking for today, reversion. Okay, that's the chatter. Let's just get into it. Trading view. Open door. Yikes. This is volume weighted average price, everybody. This is the VWAP session. And what we're going to do, oh, look at that. What a bag of rocks this thing is. Absolutely annihilated. 21% drop. That'll probably take the home builders down with it as well. Pay very close attention to that. So we're going to just get rid of the Bollinger Bands here. Volume weighted average price for those who don't know. And if you don't know how to do this on Thinkorswim, we will put the quick thing into the chat so you can follow me trying to engage in technological advancements in my life. We have volume weighted average price here. VWAP. Now, that is the anchored line right here. We're going to change that up in a moment. But what are we looking at right now? Well, if we go down to the 1 day, this is volume weighted average price. That is volume and price divided by volume. So you have a 1 minute expectation of price. And then you have deviation bands. These bands, oh my gosh, that is just too much right now. So many just pale sandwich colors. But 68% of price expectations in this band, 97% here, 99.7 here. When these stocks get down into these levels, that is where we look for what is called a reversion. That goes back to my Stanley Druckenmiller comment not too long ago, that a lot of algorithms are programmed that when we get down into that third or fourth standard deviation, they just start buying. And that is what leads to squeezes. Now, I want to point something out. If you are trying to short a stock, you need to have these types of charts up. You need to have it open in Thinkorswim. You need to have it open in TradingView. You could do it in many different places. But the broad point is this. If you are trying to short a stock and you are buying puts down here under volume weighted average price, way down in the down, lower level, third deviation. If you're buying puts down here, that ain't good. And the reason for that is pretty simple because mathematically, if this does tap here, this can check back up to volume weighted average price. And now you bought puts down here at 460, but now the stock's trading at 5. Your position is wiped out. It's about knowing where price is at any given moment. So always have this up. Always when you're about to make a trade, particularly a put, recognize where you are. Wherever you get your trade ideas from, wherever you get your recommendations from, just keep in mind, there is a thesis to the short, but there are mechanical challenges when shorting that make it difficult. So you want to be shorting up here. If there is a thesis, you want it to be up in fourth standard deviation to the upside, because again, you're looking for that pullback to that volume weighted average price and then a continuation of selling. On top of this, what we're going to do, this is the VWAP session, and there's many different ways to set this up. But as you note, it is indicators on here on the Thinkorswim. It's your little chemical lab button. And then you have to add 3 different versions of VWAP. You have to change your VWAP numbers to -3 + 3 -2 + 2 -1 + 1, giving you 3 standard deviations of price. And then you want to, if you can, add anchored. Anchored volume weighted average price allows you to anchor your volume weighted average price to whatever point you want it to be. It can be yesterday's close. It can be the earnings figures. it can be the low of a trading session or even a morning session. And what does that give you? It gives you an anchoring point to a very specific point, and it shows you what institutions are doing with their money and what levels they're trying to or not trying to defend. So if we anchored this to the overreaction of yesterday's price, or we anchored it to the high of the post earnings point, we would effectively just change the anchored number to 11.6, and we would go to 16.24. Okay. So what this is telling us is here is your volume weighted average price for the morning, but here is your anchored point to the high post earnings. This is what institutions have been doing since we've been under that level. So if we're looking for a reversion today on open, we need it to be above the 545 level. Not here, not here, not here. And why does this matter? Because right now, where this sits, see how it just banged right against that and now it's starting to sell off again? That is a specific line in the sand for this for this stock if we're looking for a reversion today. So buying above 545, but we're not trying to go long this unless it gets back above that level. Then when the market opens, we'll reestablish this and we'll reconnect it to the low of the morning session. And what that will do is it's going to change the perspective a little bit, but it's going to give you a line in the sand to trade around for the bulk of the day. So VWAP is set up, but anchor may very well just be right back at that 7 o'clock level. And now you see it's a big variance in terms of how we perceive returns. I'm anchoring it to the high of yesterday, and I want to see how the market reacts. As you can see, this is just kind of lined up directly with VWAP for this morning. So it's a difference in how you anchor it. It's a very important tool, and it's a very strong tool for utilization of earnings trading the day after. That was a long explanation. What am I trading today? Charlie, you tell me. I would like to hear Panama this morning, Secret Agent Charlie. It's just me. I would really like to hear Panama this morning. So, Don, you got 6 minutes. And you know what's going to happen? I'm going to ask for Panama. He's going to play right now. You already know that's going to happen. He's going to play right now. And then he's going to do something like play Year to the Day from Van Halen 3. Year to the Day. Remember that? What's the worst song from every Van Halen album? What is the worst song from this is a good morning Friday bit. Let's roll with it. I'm going to go with Diver Down Dancing in the Street. Panama is not a bad song. You knock that off. Dancing in the Street is pretty tough. That's a bad cover album. And then does anybody even remember A Different Kind of Truth? Chinatown. All right, I'm trading Nvidia today, and there's no ifs, ands, or buts about this. Nvidia is literally, this is a perfect day for Nvidia. Everything about this is wonderful. And literally, like, if I don't walk away with a minimum of a 40% return on a trade on Nvidia today, I need to go to the mountains and just reflect. Because again, options expiration today, volatility picking up. There are 9,000 ways to trade this stock. By the way, just to point out, the NVDQ That little thing that we were talking about that we built our entire conversation around, this thing's up 20% since it broke above this key moving average, the very things that we talk about on a regular basis. NVDQ moving higher, NVDQ pulling back. This looks like NVIDIA is ready to continue to draw down. This can get very ugly very fast, but I am specifically looking for reversion. I'm specifically looking for those overreactions. I'm looking to add Bollinger Bands. I'm looking to anchor this to the low, or forgive me, to the close of yesterday. That puts me specifically 16. There we go. All right. So I've got two very solid lines in the sand. And if we get above VWAP, you got to move here. You got about a 75 cent move. That's enough to do damage. So I'm looking for this to bounce off of the anchor today and roll back over. But this is one of those days where 10 o'clock rolls around, NVIDIA sells off to like 182, and then we wake up at the end of the day and we're at 189. You're looking for reversion, keep a tight stop, and just play what the market is handing you with optionality, things ending today. Tesla, monster, iron, monster. Same thing, right? Everything is in play today. Everything. So it's really just about something as subtle as just keeping your eye on looking for moves above the 3 adjusted and the 8 adjusted. And even if it's only a 23, 24, 25 cent move, if it happens quickly and you're using in the money calls, at the money calls, slightly out of the money calls, those things can move very, very quickly to the upside so long as you are active in the trade. You have to turn your computer, you have to turn your computer off. You turn your TV off. You have to stop paying attention to whoever's talking. You need to be in the trade. You need to be active in this. Again, here is Wednesday, right? 67.21 took you to 67.88. 68 cents on a Friday when options are expiring, particularly in an environment where there's a lot of activity and volatility is high. These things can lead very quickly to 20, 30, 40, 50% moves, but you have to be present. You cannot just walk away from your computer. You have to actively trade in that period. You're talking about a 15, 20, 30-minute experience. Experience the trade. Yes, exactly. Look at me. I feel like Robin Williams in whatever that movie was where he was inspiring somebody. There we go. Oh, there's our 15-minute. Look at that. Tesla's rolling back over. They gave that man a lot of money. They really gave him a lot of money. TSLQ is our inverse short for Tesla. And hello, did we just come up with something? Did we just become best friends? Look at that. Just rocking this morning. TSLQ looking for opportunities here. You can anchor this as well if necessary. But and this is the way to trade these other names, ancillary names. You don't have to just trade the underlying. TSLQ, TSLL, those are the inverse daily ETFs. You can trade them, and a lot of them have options that will expire today as well. Finally, iron. Who's iron? Capital markets in Australia. That doesn't even sound plausible. All right. Well, same thing. 3-minute chart, bring it in. There we go. Watching very closely on these key EMAs. This are adjusted. So 3 minutes times 8 is 24. 3 times 20 is 60. 3 times 50 is 150. Man, I just passed third grade mathematics. 24-minute with the adjusted 150. That orange line follows above that red line. What you do, you buy, you trace this. You let the 8-minute adjusted 24 become your exit. And you're looking for $1, $2 moves relatively quickly on a name like IREN. Hey, I got to get out of here. You need to go over the VWAP and an anchored VWAP on Monday. Sure, I could do it this afternoon too. This is one of the key things that we've been doing at the NVIDIA because I really want to drill down into this. I think that this is a Dead Poet Society, very inspiring film, not disturbing. Um, yeah, that didn't mess up a whole generation of fathers. Um, let's see. One last thing. Um, what's the worst Van Halen song that Don can play? He's gonna find it. I'm gonna go with well, Dancing in the Street is pretty bad. Maybe in a simple rhyme from Women and Children First. Don't do it, Don. Just go straight Panama, all right? I'm going to be back later today at 3 o'clock, take you into the weekend. It's going to be awesome. I might do it at the Still today. Why not? Why not just go to do it at the bar, hang out, or I'll just stay at my house. And on top of that, I'm going to be trading live today with the NVIDIA crew, 10:30 to 12 o'clock. So I hope everybody has a great day. I will catch up with you on the backside. Here is Don with a song from the 1980s. Take care.